If your credit score has been holding you back, this video might be exactly what you need right now. Maybe you got denied for a credit card or a car loan. Maybe you're thinking about buying a home and you think your score might be standing in the way. Or maybe you've never really used credit before and you have no score at all. And that can feel frustrating. Because when your credit is low or non-existent, it can feel like life gets more expensive. Like higher interest rates, more deposits, and fewer options. But here's the good news. Credit can improve a lot faster than people think when you understand how the system actually works. And I don't mean years from now. I'm talking about moves you can start making immediately so that you can see real results in a matter of months. In this video, I'm going to walk you through a real strategy to build your credit quickly. I have to mention that the information I'll be giving you today is what some credit repair companies will charge you hundreds and even thousands of dollars for. We'll cover how to clean up your report, ways to boost your score faster, hidden reporting systems most people ignore, and what lenders actually want to see. And make sure you stay until the end, because I'm also giving you a simple 90-day plan you can start using right away. And yes, this plan can help you even if you suffered an extremely negative mark, like a bankruptcy. So let's get into it. Before you fix your credit, you need to understand what your score actually is. A lot of people take it personally. They feel like a low score means they failed somehow. Let me be the one to tell you that it doesn't. Your credit score is simply a risk rating. It's the bank's way of asking one crucial question. If we lend this person money, how likely are they to pay us back on time? That's it. Always remember that your score is based on 5 major factors. First is payment history, which is the biggest one. That's whether you pay your bills on time. The second is credit utilization. That means how much of your available credit you're using. Number 3 is length of credit history, or how long your accounts have been open. The fourth is credit mix. That means whether you have different types of accounts, like credit cards and loans. And lastly is new credit, which includes recent applications and inquiries. Once you understand these 5 categories, you stop guessing and start making strategic moves. The first thing you'll want to do is pull your credit reports. And I don't mean your score. Your score is just the number. And your report tells the story behind the number, which is a big difference. A great place to get your reports for free is annualcreditreport.com. You'll want to check all 3 major credit bureaus, Experian, Equifax, and TransUnion. One bureau might show an account another one doesn't, and one might have the wrong balance. One also might have an error dragging your score down. You'll want to look for things like late payments that aren't accurate, accounts you never opened, duplicate collections, wrong balances, old negative items that should have fallen off already, incorrect personal information, closed accounts still showing open, and inquiries you didn't authorize. Mistakes on credit reports happen more often than people think. And if something is inaccurate, dispute it directly with the bureau and the company reporting it. Even removing one bad item can make a meaningful difference. Then look at the legitimate negatives too. These include collections, charge-offs, high balances, and missed payments. You need to know exactly what you're dealing with before you can fix it. Now let's talk speed. One of the quickest ways to improve many credit scores is lowering your credit card balances. This is called utilization. Let's say you have a card with a $1,000 limit and you owe $900. That means you're using 90% of your available credit. To the scoring models, that can look risky. Now imagine paying it down to $100. Now you're using just 10%. Same person and card, but totally different signal. That's why this strategy can move scores fast. A good practice is to keep your total credit utilization under 30%. But if you want stronger results, aim for under 10%. Now here's the move that almost always gets overlooked. Don't just pay by the due date. Pay before the statement closing date. Because many card issuers report the statement balance to the bureaus, so if your balance is high when the statement closes, that's what gets reported, even if you pay it off later. So use the card, pay most of it down before the statement date, let a small balance report if appropriate, then pay the rest in full. That one habit can make a major difference. One of the fastest ways to strengthen a thin or damaged profile is by becoming an authorized user. Here's how it works. Someone with strong credit adds you to one of their credit cards. On many accounts, that card's history can then appear on your credit report. That means you may benefit from the age of the account, the payment history, the limit, and the utilization. If it's a well-managed account, this can help significantly. Sometimes people see movement as soon as the next reporting cycle. Just be sure to ask someone who you know is extremely responsible. If the person carrying the account runs up the balance or misses payments, that can hurt your score too. So ideally, the account should have perfect payment history, low balances, a solid limit, and some age to it. This can be especially helpful for people with no credit history or very limited credit, and I've even seen it work for someone who suffered a recent bankruptcy. Secured credit cards are a good choice if you're out of options and no lender wants to approve you. Regular credit cards are unsecured, meaning the bank trusts you and gives you a limit based on your profile. Secured cards are different. You put down a refundable deposit first. So if you deposit $300, your limit may be around $300. That deposit lowers the bank's risk. But the key benefit is this. Many secured cards report to the major credit bureaus just like traditional credit cards. So you're still building history. Here's how to use one the right way. Put one small recurring bill on it. Maybe gas, your phone bill, or a streaming service, and keep usage low. Pay it down before the statement closes. Then pay it off in full every month. Do that consistently, and over time, many issuers may raise your limit or upgrade you to an unsecured card. This is one of the best rebuilding tools available. I think it's worth noting that you should definitely consider applying for a secured credit card at a financial institution that you currently have a banking relationship with. It will for sure boost your approval odds. Another smart tool is a credit builder loan. These are offered by places like Credit Strong, some credit unions, and certain banks. Here's how it works. Instead of handing you cash up front, the lender places money into a locked savings account. You then make monthly payments toward that loan. Think of it as a reverse loan. Those payments get reported to the credit bureaus. Once you complete the term, you receive the money back minus any fees or interest depending on the product. Why does this matter? Because it helps build positive payment history, and it can also improve your credit mix by adding an installment account. And what I love most about credit builder loans is that it helps you build savings at the same time. It's a solid option if you don't have much history or only have credit cards. Just make sure the monthly payment comfortably fits your budget. Because on-time payments help. And be sure to never miss a payment. Because just like traditional loans, the credit builder will also report late payments. If you feel like you won't be able to make a payment one month, just reach out to the company so that they can pause the payment. This is totally acceptable as they're always willing to work with you. The last thing you want to do is miss a payment while you're trying to build a great credit profile. Here's something most people never hear about. The big three bureaus aren't the only ones collecting data. There are also specialty reporting agencies. Some track checking account history, some track overdrafts, and some track identity verification data. Some even track rental or utility history. Examples of these third-party agencies include companies like Chex Systems, Innovis, and LexisNexis Risk Solutions. Now you're probably asking, why should you care? It's because you can have a decent score and still get denied for certain products if one of these reports has issues. Some lenders, landlords, banks, and service providers look at this alternative data. That's why it's smart to know these systems exist. You can also request the information these third-party agencies have on you and dispute any errors just like the main three bureaus. You'd be surprised at how much inaccurate information they can have on your profile. If you want approvals, you need to think like a lender. Lenders want to see consistency and stability. They want evidence that you can borrow responsibly. That means having on-time payments, low balances, older accounts, and limited recent inquiries. They also want to see a mix of accounts, no collections, and no recent delinquencies. You'll want to display steady behavior month after month. What they don't want to see is chaos, like maxed out cards, missed payments, too many new accounts, and constant applications. Your credit report should tell a simple story. This person handles money responsibly. Thanks for staying all the way to the end. Now here's that 90-day plan I promised. If I had to rebuild credit quickly, here's exactly what I'd do. In week 1, I'd pull all 3 reports and dispute any errors. And after that, list every negative item. In week 2, I'd pay all card balances down below 10% and become an authorized user if I had a trusted option. In week 3, I would open one strong, secured credit card. Right after that, I'd get a credit builder loan. In months 1 through 3, I'd never miss a payment and pay balances before statement dates, all while keeping my credit utilization low. I'd also avoid random applications and monitor updates each month through sites like Wallet Hub and Credit Karma. That's how momentum starts and how good habits stick. If your credit is low right now, it doesn't mean you're stuck. It just means you need the right strategy. Credit rewards consistency, patience, and smart moves. And some of those moves can work faster than most people realize. These simple steps can take you from a 500 credit score to a 720 in a matter of months if you stay disciplined. If this helped you, comment credit below. And remember this: bad credit can be temporary, but good habits can last for life. Don't forget to like and subscribe to the channel. Thanks for watching.